Hi, it's John Griffin with Coldwell Banker, and today I want to talk about the idea of getting pre-approved prior to looking for a home. So we're here at Caliber Home Loans in San Rafael with Amy Yamamoto. Amy, thanks for meeting with me today.
Thanks for being here, John.
So can you talk about the process of a buyer getting pre-approved prior to looking at homes?
Sure. Usually I like to start out with a phone conversation. In that conversation, I'll ask questions about income, assets, and credit history. And I can usually give the person on the other end of the phone a pretty good idea of what they qualify for. But the next step is really to verify that information.
So how long can it take to get pre-approved for a loan?
Well, if the buyer is looking for an FHA, VA, or Fannie Freddie loan, that means that their loan amount would be up to $726,525. Then we may be able to do instant verifications of their income and their assets and literally get them pre-approved in minutes. However, if they're looking for a jumbo loan, then I'm going to need them to provide the backup documentation from their records, and then it'll take about 1 to 2 days after we receive that documentation.
So let's talk about down payment. I know 20% is typical, but there are options to do less than that.
Sure. Yeah, here in the Bay Area where rents and real estate prices are higher than most of the nation, it's pretty tough to scratch together 20% for a down payment. So the minimum down payment on a conventional loan is typically 3%, and the minimum down payment on a jumbo loan is about 5%, but remember you're going to pay a pretty significant rate premium if you go that route.
Right. And then when you're under 20%, there's typically PMI. Talk about PMI.
So PMI stands for Private Mortgage Insurance, and it's basically an insurance policy that covers the lender in the event that the borrower stops making their mortgage payments. PMI is something that increases, the premium increases as the down payment decreases, so it's based on risk. And one thing to note is that you can get rid of the private mortgage insurance once you've paid down your mortgage to the point that you have at least 20% equity in the house.
Right. And then for closing costs, what are typical closing costs on a purchase?
So it's going to vary. Some closing costs will vary depending on the purchase price, while others are fixed. And I think if you budget 1 to 2% of the purchase price of the home for closing costs, you'll probably be in pretty good shape. One thing to note is that if you don't have a lot of extra money after coming up with your down payment, you could ask for a seller credit to help you offset your closing costs. You can get up to 6% of the purchase price as a seller credit, but remember, I told you 1 to 2% is a typical closing cost amount, so you want to make sure that you can use up the entire credit that you ask for.
Right. Well, great. Thanks for that information today, Amy. And if buyers want to get pre-approved for a loan, as the first step, they should call Amy at Caliber Home Loan and get started. And then I'll go show them some houses, and we'll find you that perfect house. So this is John Griffin with Coldwell Banker. Thanks for listening.